Assalamualaikum warahmatullahi wabarakatuh. Hello everyone and my honorable lecturer. Welcome to my video presentation related to my final paper assignment. My name is Safira Annisa and I would like to present my paper entitled The Effect of Accounting Conservatism and Earnings Quality Towards Value Relevance of Accounting Information. At the end, I hope this presentation can give more understanding how much the accounting conservatism and earnings quality important in affect the value relevance of accounting information. I will divide today's presentation into three chapters. Chapter 1 about introduction that consists of background as well as the research problem and will close by the problem formulation. Chapter 2 we will gonna have the discussion of the core of the topic. This chapter aims to answer all of the research formulation. And the last is chapter 3 that is about the conclusion that expect can summarize all of the important point in precise to make simplify in understanding this topic. Now we come to chapter 1 that is about introduction, and this session I will tell you about the background why I choose this study. The background is the first. Because the external parties such as investors, creditors, suppliers, government, or the public require the company to disclose their financial and other non-financial information to be more transparent and reveal the real condition to take the decision. This is in line with the statement of Muhammad 2009 in terms of the external parties believe company's credibility is marked by the adequacy of information presented in the company's financial statement. We need the company's financial statement because the objective of the companies as a legal firm which generate their activities regularly and continuously is to the aim of obtaining profits. The second background is come from the research conducted by Yenti and Sofyan 2013. They say that the financial statement will be more perfect and can be justified with the accounting concept of conservatism. This responsibility is intended for the presentation of financial information which must be prudent in measuring assets and profits because activities and business are subject to uncertainty. Accounting conservatism itself is a reaction that tends to lead to a prudent attitude, or is called a prudent reaction, in ensuring that the inherent uncertainties and risks that pose a threat in the business environment are sufficiently considered. And these uncertainties and risks must be reflected in the financial statement so that the predicted value and neutrality can be improved. The third background is because users of financial reports certainly want the earnings reports figure contained in financial reports has a high quality, or we call earnings quality, because earnings quality can determine how the performance of a company and also affect the company's profit in the future, and it is in order to useful in making decisions that meet relevant and reliable characteristics. Earnings quality is relevant if it's able to reflect changes in stock price and stock returns. So that it states that accounting profit has useful information to the investors. The concept of value relevance is inseparable from the relevant criteria because the amount of an accounting number will be relevant if the amount presented reflects information relevant to the valuation of a company. And the previous background supported the fourth background, that is statement from Francis and Sippert in 1999 that defines the value relevance of accounting information as the ability of accounting numbers to summarize the information underlying stock prices, so that the value relevance is indicated by statistical relationship between financial information and stock prices or stock returns. And the last background comes from the statement from Watts et al. 2003 that stated that accounting information with low relevance shows the low quality of financial reports and cannot be used as a basis for decision making. He also states that the causes for the low and decreasing relevance of the value accounting information because first, ignoring the role of dynamic accounting information in research, and the second reason is because the increasing conservatism because conservatism has influenced accounting practice and theory for centuries. This reason Linking the needs of transparent companies reporting, the perfectness of financial statement in help by accounting conservatism, and the way to get the quality in earnings reported as the most factors in decision making with the need of the value relevance of accounting information. Actually, the principle of conservatism is still considered a controversial principle. On one hand, it is useful for avoiding the opportunistic behavior. Meanwhile, on the other hand, conservatism is considered a constraint that reduces the level of value relevance of financial information. This is what caused a polemic among accounting researchers. This controversy is reinforced by several previous studies that still differ in their views. For example, from research from Kirianto and Supriyanto 2006 that states the more conservative the accounting, the more biased and useless because they cannot reflect the true value of the company. While Costanidis et al. 2010 say differently. They said we just need the application of the principle of medium conservatism, which has the best value relevance of financial statement. Based on the background and previous research that found a research gap among them, the study aims to study empirically the effect of conservatism accounting and earnings quality towards value relevance of accounting information. So that the problem formulation of this study is first, what is meant by the value relevance of accounting information? Second, how the accounting conservatism affect the value relevance of accounting information, and the third, how the earnings quality affect the value relevance of accounting information. Now we come to the chapter 2 that is about the discussion, and we will gonna discuss to answer for the first question of research formulation that is about what is meant by the value relevance of accounting information. Value relevance of accounting information is one of the techniques used to assess the usefulness of accounting information is the value relevance. Because value relevance are proxies to measure the usefulness of the information. Value relevance is a useful information to measure information appreciation on the usefulness of the information and is often used to assess the impact of certain accounting information. The second is the value relevance theory is accounting information to explain firm value. This is about from Ball and Brown 1968 and can be characterized by the quality of accounting information. Several empirical accounting studies have succeeded in finding the value relevance of accounting information in order to improve financial statement analysis and conclude that the more relevant an accounting value is, the more quality accounting information is because it reflects the real situation. The value relevance is a capital market-based accounting method because it is used association between the accounting value, which is it is presented in the financial statement, and the fair value of financial position and performance of the company, which proxy by stock price and stock return. It means high quality accounting information is indicated by strong relationship between stock price or return and earnings because those accounting information reflects the company's economic condition. This is evidenced by Ball and Brown 1968, who found that company increased its profits near the announcement date of earning that show a positive abnormal returns. This is supported by several studies showing that the market rewards earning and book value. This study proved the accounting profit has useful information for investors. The value relevant use the study of earnings because earning is one of accounting information in financial reports which has been the main attention of investors or creditors to use as the basis for decision making. Likewise, as been explained by Scott, the stock price or stock return tends to increase if the reported profit is greater than the expected, likewise vice versa. Next question is how to measure the value relevance of accounting information. Actually, Francis and Shipper in 1999 revealed that there are 4 approaches in understanding the value relevance of accounting information. The first is by fundamental analysis approach. This approach focuses on the usefulness of accounting information in equity valuation that causes changes in market prices and detects stock price deviation. Financial statement information is assumed to be relevant for valuation if portfolio based on this information are associated with abnormal returns. The value relevance is examined by measuring returns generated by implementing trading strategies based on accounting information. The second approach is predictive approach. This approach says that accounting information to be relevant if it is useful for predicting the prospect for future company performance or predicting future earnings, dividend, or future cash flow. And the third approach is approach to embodiment value relevance of accounting information. This approach says that accounting information is relevant if it is used by investors to set share prices. This approach implies that value relevance is measured based on market reactions to the new information. Accounting figures are assumed to have information contained if the release of new information modifies investors' belief about future cash flow and thus causes price revision. And the last approach is value relevance measurement approach. This approach implies that the value relevance of accounting information contained in financial statement is measured by its ability to capture or summarize business information and other activities. Under this measurement of value relevance, accounting information is value relevant if it captures or summarizes information that in turn affects stock prices. The main key to measuring the informational efficient market is the relation between the price of securities and information. Now we come to the discussion of the accounting conservatism. Sword Journal 2005 defines conservatism as an attitude in the face of uncertainty to take action or decision based on the worst possible outcome of uncertainty. In this case, GAAP provides flexibility for management in determining the accounting methods and estimates that can be used. In conditions of doubt and uncertainty, a manager must apply conservative accounting principle. If more than one alternative is available, the conservative attitudes tend to choose an alternative that will not make assets and income too large. Accounting conservatism is defined as an attempt to select GAAP generally accepted accounting methods that slow down the recognition of revenue, accelerate the recognition of expenses, and lower assets valuation and also increase the valuation of debt. In a simple word, conservatism is the act of management by anticipating no profit and acknowledging losses more quickly. The implication of the concept of conservatism of accounting principle is that accounting recognizes costs and losses that are likely to occur, but doesn't immediately recognize future income or profit even though the possibility is high. Conservatism is a mechanism to facilitate efficient contracts. In reporting, the amount in the balance sheet will understate the actual net asset value that will be shared internally. Management will report assets at the lowest value and reports liability at the highest value, as well as delay the recognition of revenue and accelerate the recognition of costs. Accounting for conservatism indicates that company management use a management pattern of income decreasing. This means that profit as a measuring tool for the company has not been presented actually. However, this income decreasing can be used as a solution so that the company's performance is considered good by the external parties and the company will attract the investors and creditors to the company. The use of income decreasing is related to the theory of value relevance, where the FASB concept statement number 2 states that to be relevant, accounting information must be able to make different decisions for its user in predicting the impact of past, present, and future events to confirm or correct expectation. As we have discussed before, it is accordance to the second approach of the value relevance. The way accounting conservatism affects the value relevance of accounting information is by will cause investors and other users of financial statement to predict according to their expectation, not according to the impact they worry about. Conservatism as a method of reporting in accounting practice is considered to have a positive impact on the value relevance and quality earnings. Due to the uncertain business environment, the historical recording method of this principle can provide better information about the company's future economic prospects. So actually there are two types of accounting conservatism. The first is conditional and unconditional accounting conservatism. The conditional conservatism refers to the asymmetric recognition in the profit and loss, which accelerate the recognition of bad news while delaying the recognition of good news. Ball and Sigfakumar 2005 define conditional conservatism as the biased disclosure accounting of the low book value of shareholder rights. But the unconditional conservatism is the opposite of the previous type. This indicates the systematic and continuous bias of recognition of income, and this conservatism arises by the company use of the accounting principle that lead to decrease the cumulative profits declared. So, what are the importance of accounting conservatism according to Al-Sakini and Al-Awawudeh 2015? There are several importance of the accounting conservatism. First, it reduces the asymmetry of information between managers and investors and other relevant parties through its role in mitigating the impact of inflating profit practices, enhancing the credibility of profits, and reduce information asymmetry. Accounting conservatism also plays a major role in enhancing the credibility of the management because it includes the closure of losses in a timely manner. The second importance is because the accounting conservatism means to reduce the possibility of suing the company management by related parties due to its accounting policies, as it is likelihood of prosecution the management because of the accounting policies designed to inflate the value of the assets is higher than the likelihood of being sued because of policies designed to reduce the value of assets. The third importance is the tax justification are deemed the main motive for using the accounting conservatism because the early recognition of losses and the delayed recognition of revenue until they occur will lower taxable income and current tax on the company and delay them to later periods. Now we will gonna discuss about the earnings quality. Hodge 2003 defines earning quality as the difference between reported net income in the income statement and with the actual income. Quality earnings are profits that reflect the actual financial performance of the company and that can be reflect sustainably earnings in the future. Penman and Zeng 2002 argues that earning quality comes from the changes in the level of firm conservatism over a period of time. Earnings quality in accounting refers to the fairness of all reported earnings. Earnings quality is the quality of earnings information available to the public that is able to show the extent to which earnings can influence decision making and can be used by investors to assess the companies. Earnings quality is an assessment of the extent to which a company's profit are reported, controllable, and good for the bank. So, in order to answer the third question of the research problem, by how the earning quality affect the value relevance is actually same as the role of accounting conservatism affect the value relevance. According to the Chan et al., the earnings quality also affect in the same way by predict stock price movements in the future, so that the stock price will directly affect the value of the company, which continues to increase. Conversely, if the quality of earning is poor, the value of the company will decrease. The quality of earnings in the financial statement will be very useful for the capital market because it will make investors measure the value of a company as a basis for investing. If the market reaction in the hike on the value of the company in a company, it will increase the value of the company and make investors want to invest in that company. According to Deco and DCF 2002, companies that have good earnings quality can estimate the characteristic of the earnings process that are relevant for decision making. So managers as company managers must be able to make earnings report in financial report that have good quality so that earnings information can has a value relevance enough for decision making. Now we come to the last chapter of this presentation, that is about the conclusion. Conservatism is an attitude in facing uncertainty to take action or decision based on the worst possible outcome of the uncertainty. This principle is applied because of the uncertain future economic condition and avoids excessive optimism from management and company owners. The implication of the concept of conservatism for accounting practice is a accounting recognizes costs and losses that are likely to occur but not immediately recognize future income or profits even though they are likely to occur. Conservatism as a method of recording in accounting practice is considered to have a positive impact on the value relevance of accounting information. Conservative financial reports are one mechanism to limit managers in manipulating financial statements, in the sense of preventing managers from presenting overstatement financial reports so as to increase the company value and share prices. In the reporting, the value presented in the financial statement will be understatement, where the understatement of reporting causes smaller losses than overstatement, which is good. This indicates that the more aggressive the accounting method, it is the lower the earnings quality. The lower the earnings quality, the higher the risk determination. The higher the risk determination, the lower the value of the company being analyzed. Conservatively, earnings quality is considered to be higher because it is less likely that current performance and forecast of future performance will be overestimated than earnings determined in the more aggressive manner. Thus, conservatism can help users a financial statement by presenting profits and assets that are not overstated. The stock price or stock returns tend to increase if the reported profit is greater than the expected profit and vice versa. This is the reason for management to use conservatism accounting practices. When accounting for conservatism is used, earnings reported will increase as a result of retained earnings in the previous period, which at the same time will cause the stock prices and returns to increase as well. The quality of earnings shown in the financial statement is one of the factors that investors consider investing in a company, because in general, investors judge if the profit generated by a company is high, then the company has a good value. This is why management prefers to be careful in reporting its profits. The result of this study indicate that when a company is classified in the low conservatism group, the company has a low value relevance of earning information. Along with the increasing application of the conservatism principle, the value relevance of earning information will also increase. Other than that, earnings quality is also able to strengthen the relationship between accounting conservatism and value relevance of financial statement. Conservatism accounting principles that prioritize prudence in presenting financial reports tend to produce relevant financial reports so that they can be used as benchmark in decision making. Of course, financial reports that are relevant will show the quality profits as well. I think that's all from me. I hope my